Today we are diving into GitLab's Q2 earnings. Now, this quarter brought in some genuinely exciting positives, but also a few surprises that left investors divided. So here's a quick summary. GitLab smashed the earnings with rapid revenue growth, about 29%, and a strong profit margin. But despite the great numbers, the stock took a nosedive after the announcement. So what exactly happened? Let's break down everything you need to know. And if you're excited about this video, please hit that like button and subscribe for more analysis like this. So before we jump in, if you haven't already checked my previous deep dive on GitLab, I highly recommend checking that out first. In that video, I explained what GitLab actually does, broke down its business model, and look at its long-term opportunities and risks. The link is in the description below, and watching that will give you a great foundation for today's update on the latest earnings. So let's take a look at the income statement. Now, GitLab brought in about $236 million this quarter, as you can see here. This is up almost 29% from the same quarter last year. Now, that is solid growth. And moreover, it also is 4% above what Wall Street was expecting. So clearly, there is a demand for GitLab's platform, and that demand is strong. And they are attracting a lot of business, especially from larger enterprise customers. Looking at the gross margins on a GAAP basis, the gross margin stayed steady around 88%, which is impressive for a software company. The non-GAAP gross margin dropped just a touch from 91% to 90%. So they are keeping costs in check even as they scale up. That means GitLab isn't sacrificing profitability to chase down growth, and that is a positive sign for long-term investors. Now, talking about operating costs, let's take a look at the sales and marketing. As you can see, it went from about $98 million all the way to $109 million. That's roughly a 11% increase in sales and marketing. The cost actually dropped as a percentage of total revenue. So that's a sign of real efficiency improvements, showing GitLab is getting more bang for its marketing bucks. Looking at the research and development costs, that went up from 61 million to 71 million. Again, roughly 17 or 18% increase. Here as well, it shrank as a share of revenue, down by about 2.4 percentage points compared to the previous year. So even as they are investing in innovation, especially in AI, they are scaling those costs effectively. The general and admin costs went from 43 million to 44 million. That's about 2% increase. And here as well, while it is slightly up in absolute terms, as revenues grew faster, this category became less of a drag on margins. All these efficiencies are adding up. Non-GAAP operating income jumped 117% to $39.6 million. So the total operating expenses went from 202 million to about 225 million. That's about a 12.5% increase. So the loss from operations narrowed from 41 millions down to about $18 million. Then you consider provision for income taxes, and you come to a net income of negative $10 million. Now you'll see that last year they had positive 12 million, and that is because they did get a benefit from income taxes to the tune of almost $39 million. So that was the income statement. Moving on to the balance sheet, we say that for the period ending July 31, they had cash and equivalent of $261 million and short-term investments of $903 million. So they have almost $1.1 billion in cash and cash equivalent. And if you take a look, there is hardly any debt on this balance sheet. So this is a cash-rich balance sheet, and that is a really positive sign. So they continue to be able to generate cash. The size of their balance sheet went from $1.4 billion to about $1.5 billion. And out of this $1.5 billion, almost $1.16 billion is cash and cash equivalents. So this is an extremely strong balance sheet. Looking at the statement of cash flows, we start with the net loss of almost $10 million, add back stock-based compensation, add back changes in assets and liabilities, add back net working capital, and we get to a net cash provided by operating activities of $49 million. This is almost 400% compared to the cash flow provided by operating activities last year, which was about $11 million. So almost a fourfold increase. Looking at the cash flow from investing activities, we see that this company does not have any major capex requirements. And so the free cash flow rose 330% year over year to $46.5 million. This shows that GitLab is converting profits into real cash at a rapid pace, a vital sign for any company's health. But here's a little concerning thing. Accounts receivable has jumped this quarter. Now, the main reason, GitLab signed a lot of big enterprise contracts, and these large customers, they tend to pay on longer terms. So while revenue is strong, some of the money is taking a bit longer to hit the bank. You'll also see deferred contract acquisition costs. So here, GitLab shelled out more cash upfront to secure long-term customers. Think sales commissions and related expenses. These are capitalized and will be expensed over time, but represent real cash going out this quarter. It's an investment in future growth, but it does impact short-term cash flow. Now, talking about the guidance, what's next for GitLab? Management issued guidance that's a bit more cautious than some were hoping for. For the upcoming quarter, GitLab expects revenues between 238 to 239 million. That's about 1% below what analysts wanted to see. That immediately puts a damper on the otherwise upbeat results. For the full year FY26, the company is guiding to revenues between 936 to 942 million. That's around a 24% growth. Profits are also expected to rise, but at a slightly more measured pace than last year's blowout. EPS should land between 19 cents to about 20 cents, and full year guidance was nudged up to 82 cents to 83 cents per share. Still a healthy outlook, but not the beat and raise some had hoped for. So, why did the stock crash post earnings? First, that guidance we just discussed, even a slight miss on future expectations, can sometimes trigger a big reaction in a high tech growth stock. The second factor is the CFO's departure. It also rattled the market. He played an important role in driving financial discipline, and the exit, especially with no permanent successor announced yet, introduces a bit of uncertainty. There's also some softness emerging in GitLab's small and medium business segments. While big enterprise deals look strong, investors are watching for any signs that the company's growth engine is losing steam, especially among smaller customers. And lastly, the company's net revenue retention rate slid slightly to 121%. As I have discussed in my previous videos, it had fallen from about 140s down to 122 in the previous quarter. So it's still strong at 121, but investors are noticing that in this market, even a 1 point dip doesn't go unnoticed. Looking at the future prospects, what should investors and tech watchers generally watch out for? So GitLab is making major investments in AI-powered development tools, especially the GitLab Duo agent platform that we had talked about in my previous video. If you haven't checked that video out, please do take a look at the link below. I'll try and see if I can put a link on the right here. Customer adoption is ramping up here, and this suite could provide a significant moat. The brand's upmarket shift continues, with more large organizations signing multi-year contracts. This bodes well for revenue stability and future margin expansion. However, GitLab does need to show that it can keep up those momentum in the small and medium businesses and is able to execute smoothly during this CFO's transition. Now, looking at GitLab's long-term chart, I'm on the weekly chart here. Again, very similar looking chart to what we had seen for Sentinel-1. Here as well, since 2022, so almost for the past 3 years now, the stock price has hovered in this range of $32 on the lower side and about $70 to $72 on the higher side. So it has been going sideways for a while. For those who want to trade this stock, it might not be a bad idea to buy in that 30 to mid 30s range and then try and sell the stock when it reaches about $70 to $72. However, if you are bullish on the stock in the longer term, which I am, considering that this is a classic rule of 40 stock. Why do I say that? Because the free cash flow margins are in the range of about 20 to 25 currently, and the growth is almost mid 20s. So if we add those two figures up, let's say this quarter they had 29% year over year growth, and their free cash flow margin was about 17%. If we add those two numbers up, it exceeds 40. And that's what I mean by this is a rule of 40 company. For long-term investors, it might not be a bad idea to again buy in those 30s, 40s, and then wait for the price to cross that ceiling of $72. Once that ceiling is broken, I can see the stock definitely go up to $100 or more. Now, in terms of the valuation of GitLab, I have done that in my previous video, so do check that out. There I have given a bear, a base case, and a bull case scenario for GitLab stock valuation. So to wrap it up, GitLab delivered a quarter with outstanding growth, improving profitability, and a clear sign that it's executing well at scale. But the cautious tone in guidance and the leadership transition and a few holes in the growth story spooked investors, triggering a sell off. The long term opportunity around the DevSecOps and AI innovation remains very much intact. But for now, the market wants to see consistency and a smooth handoff in leadership. If you enjoyed this breakdown, do hit that like button, subscribe for more deep dives, and let me know what you think about GitLab story down in the comments. Thank you for watching.